So guys, today I want to talk about the best dividend stocks to invest in. So for those who love dividends, here is my opinion on dividend stocks that I would personally invest in. First, I'll talk about stocks that pay dividends above 10% per year, and then I'll talk about stocks that pay dividends around 4% per year. So first, I want to talk about Kanoe EIT Income Fund. I don't know if I'm pronouncing it right. Kanoe EIT Income Fund. So this stock, it's on the Canadian Stock Exchange. It pays 10% dividends per year, and it's paid out monthly. So it's a mutual fund that holds all these stocks. These are the top 25 holdings of this mutual fund. So you can see Bank of Montreal, Brookfield Asset Management, Wells Fargo, Johnson & Johnson, Berkshire Hathaway, Coca-Cola, Goldcorp, Shaw Communications. So it's pretty safe. And so there's two ways you can profit from this mutual fund: capital gain or dividends. But it's most likely going to be dividends because it doesn't move much. Stock price doesn't move much. So if you look at 1 year, you can see it ranges between 11, 14, and 12. If you look at 5 years, I mean, it reached 14 at some point, but just for a short period. But in 5 years, it moved between 10 and 14, but most of the time, as you can see, it's trading around 11, 15, and 12. So it's a pretty stable stock. You can hold it long term and collect 10% dividends per year. It's on the Canadian Stock Exchange, and it invests in, as you can see, pretty big companies. So obviously, these companies alone individually do not pay that much dividends. So how are they able to pay 10% dividends per year? So most likely, I'm assuming, they're selling covered calls on these stocks that they own. So because they have volume, they're able to sell covered calls on these stocks, which pays out a monthly revenue, and then they're able to distribute dividends to the shareholders. Part of the revenue, of course, that they're getting. I'll have a separate video on covered calls. But yeah, for sure they're doing something else, because it doesn't make sense that they're able to pay 10% per year when these stocks don't even pay 10% dividends per year. I think the highest some of these stocks pay out is like 4% per year in dividends. So these are some highlights of the fund. So it pays 10 cents per share. So currently it's at 10% yield per year. You can actually ask them to take the dividends and purchase more shares with it right away. So you get the effect of compound interest. So the 10% dividends that you're getting, it'll be used to buy more shares, and those extra shares that you bought will be also collecting dividends. So that's how your money grows with compound interest. But personally, if I would buy this, I would buy it at around 11. I wouldn't buy it at the current price. But for those who love dividends and they just want to hold something long term, this would be a good stock for sure. So as you can see, it's pretty consistent in paying out the dividends. So for the last year, they've been paying it every month. For 2 years, they've been paying it every month. For 3 years, they've been paying it every month. For 4 years, 5 years, for 10 years. So they started paying it in 2008. So the first dividend, was first dividend was March 2009. That's when they started paying dividends, and since then they've been paying out dividends every month. So it's pretty consistent by looking at the history. So another stock I like is basically anything from Quadravest. So this is a mutual fund that is traded on the Toronto Stock Exchange, and basically it invests in big name companies. Every product that they have basically invests in different companies. Their most consistent stock or mutual fund that has never missed a dividend distribution is DFN.to, which is Dividend 15 Split Corp. So this one pays right now, with its current price, a yield of 12% per year, but it actually pays 10 cents a share every month. Current price, it comes up to 12% per year, and it's very consistent. It has never missed a dividend distribution since it started paying it. So this one also started paying dividends. First one was September 2008. That's when it started paying dividends, and it's been paying it ever since, every month since 2008. Now this particular mutual fund invests in the following companies: Bank of Montreal, Bank of Nova Scotia, Bell, CI Financial Corp, CIBC, Enbridge, Manulife, National Bank of Canada, Royal Bank, Sun Life, TELUS. So as you can see, all big name companies that are not going to disappear. Now this one, I know for sure the way that they're able to pay out these high dividends is by selling covered calls, which eventually I'll make a video about covered calls, because these stocks individually do not pay more than 4% dividend per year. So how are they able to pay 10% or 12% per year? So this is also a good one for those who want 10% or more in dividends. It's pretty safe. The only risk with this one, or like any other mutual fund that pays high dividends is that if ever they terminate the mutual fund, you might not be able to get what you paid for it. So they explain how much you would be getting for it. So basically, for the Class A shares, you'd be getting the net asset value at that time minus $10. So right now, the net asset value is $18.29. So if they were to terminate it today, you'd be getting $8.29 for your shares, yet they're trading right now at 9.82. So if you paid 9.82 and they terminate it, well, you just lost like 10%. But if you buy it, let's say 9.82, and you hold it for 5 years and you're getting 10% per year, so even if they decide to terminate it and you get $8 for it, you still made more in dividends than you're going to lose in capital gain. But what ends up happening is that they keep renewing the mutual fund as long as it's successful, and that's what they keep doing. They keep extending it for every 5 years. More likely that they don't terminate it, but it's good to know worst case scenario. So basically any product they have works the same way, but this one, the Dividend 15 Split Corp, is their safest one and most consistent one. Now I bought some Dividend 15 Split Corp 2 because it is much cheaper, and right now the yield is about 18%. But the risk with that is when I bought it, they weren't paying out dividends. The dividends were suspended because the net asset value was too low. And I bought the stock, the stock at too high. I bought it at 6.69. And I think today it's trading at like 5.6. Wow. So today it's trading at 5.52. But look at the yield. The yield right now is 21%. I collected dividends twice from them. So 2 months I've been collecting dividends. I could buy some more, probably put another $500 in this stock. Maybe around 5.25, I'd probably buy some more. So this one, if they decide to terminate it, net asset value right now is 14.83 minus $10. I'd be getting $4.83, but I bought it at 6.69. So that's the risk with this type of mutual fund. But they rarely terminate, they just keep renewing. So even if I bought it a little bit higher, I'm still collecting crazy amounts of dividends. Or I could, if I buy it at 5 and get 483, then that's very good, that's very close. And by the time they decide to terminate it, net asset value could increase. I could be getting more than what I paid for. So that's the only risk, is that there's net asset value will determine how much you're getting if they decide to terminate it. So this one expires December 1st, 2019, but like I said, in most cases, they just keep renewing. So this is a good one to consider for those who love dividends. And you could basically look at all the others. Financial 15 Split Corp is similar to Dividend 15 Split Corp, pays around like 11-12%. Invest in the same companies. So you can take a look at these. All the information is on their website. So another dividend stock that I like to invest in, that I have probably around $2,000 in, is New York Mortgage Trust. This one pays 13% dividends per year, but because I'm a Canadian resident and it's a US stock, there's 15% that's withheld. So I get around 10% from the stock. 10% dividends per year. This one I bought our average price 6, so right now it's trading at 6.3, 6.43 after hours. So it's pretty stable. Sometimes it goes up to 7. If you look at the past year, see, in 5 years it traded between 4 and 7.55. So it doesn't move much, but it's been very consistent with their dividends. So this one's paid quarterly, so every 3 months. So for 2 years they've been paying it, for 3 years they've been paying it, for 4 years they've been paying it, 5 years, 10 years, and you can see that also in 2008 they started paying it, and they've been consistent ever since. So this is a good stock. Personally, I have shares in New York Mortgage Trust and Dividend 15 Split Corp 2. So New York Mortgage Trust is a REIT, so real estate investment trust. Not sure if they have commercial properties or just if they invest in mortgages, but you can definitely look into it. So this is another REIT that I used to own, but I sold because their dividend decreased. They used to pay almost 12% dividends per year. Now they're down to 6%. I bought several times and I ended up selling at like 14.5. So yeah, I sold around here at this point. And after that, I was lucky, their dividends decreased. So they're into commercial properties. So they've got commercial properties that they rent out. So whenever it's vacant, well then, that it affects their rent and then affects their performance and their ability to pay dividends. So there's actually potential to make capital gain with this one, because the 1 year target is $14 and it's trading at $12 right now, but the dividends is only 6%. if you're happy with 6% dividends, which is pretty good, it's above average, it'd be a good stock to buy. I'm just disappointed because I know that they used to pay more. So this is a good stock to consider also if you love dividends. So basically, to look for stocks that pay dividends, you just need to use a stock screener. You could use finwiz.com, you could use Questrade. Personally, I like to use Investor's Edge just because I'm used to it and it's easy on the eyes. So I'll go to stock screener, pick my country. I'll usually pick a market cap, let's say greater than, let's say 300 million, and then dividend yield greater than 3%. And then I'll search, and under estimates here, I can sort by dividend yield, but I'm gonna sort by market cap instead. So obviously the first ones that come up are the bank stocks because they pay around 4% dividends per year. So if you're okay with 4%, bank stocks are amazing, of course. They're safe. The one that's underpriced right now is Bank of Nova Scotia. It's definitely a good time to buy Bank of Nova Scotia and Enbridge, although Enbridge reached 37 in the past year. So maybe 44 is not the lowest price you can buy it at, but Enbridge right now is paying around 7% dividends. Bank of Nova Scotia around 4%. So basically, that's how you filter and find dividend stocks. You find the companies, you research them, see if you're comfortable putting your money in them. It's important to also buy low, not just buy at any price just because you're going to get dividends. Try to get in at the right price so you can profit from the capital gain increase and obviously profit from the dividend. And when you buy lower, the dividend yield is higher because they pay an amount, a fixed amount. So if they pay a fixed amount on a smaller price that you bought, it ends up being a higher percentage for you. You got TELUS, you got Sun Life, you got Manulife. Manulife at $20 would be interesting. You got Bell, also pretty good, pays around 5% dividends. Bell Canada. Now if we go back and let's look up American stocks. So we'll choose United States. Market cap, let's say 500. Dividend yield, let's say 3% also. We're gonna have way more matches on the American Stock Exchange. I'm gonna sort by market cap. It's already sorted by market cap. So we got, first one is ExxonMobil, 352 billion. So ExxonMobil probably pays around 4% also. Yeah, pays 4% dividends per year. You've got AT&T, which was well priced. It went up a bit today. It was trading around $31. Now it closed at 33.42. But AT&T is a good stock. You got potential in capital gain and you got dividends also of about, so it pays about 6% dividends per year. That's amazing. Procter & Gamble. I think Procter & Gamble pays under 4%. Yeah, 3.47%. Procter & Gamble. Coca-Cola, of course. So really, so many stocks that you can buy that pay dividend stocks. Just use a stock screener to filter. I've given you some stocks that personally I would invest in for dividends. So just research the company, see how often they've been paying the dividends, and make sure that you're buying the stock relatively low so that you can profit from the capital gain from the stock price going up, but you can also profit from a higher dividend yield. So the lower you buy the stock, usually the higher the dividend yield, assuming that they pay a fixed amount in dividends. Sometimes when the stock drops, the company will adjust their dividends and they'll pay less, but in most cases they don't. So yeah, if you have any questions, leave them in the comments below. I think my next video I'm gonna talk about which is better. Is it best to invest in dividend stocks only, never sell, just buy dividend stocks low and just keep them forever and just keep collecting dividends, use the dividends to buy more of the same shares so that they also collect dividends? Or is it best to buy and sell so you can benefit from the capital gain? So basically it'll be dividend investing versus capital gain investing. So yeah, I use Investor's Edge as my broker in Questrade. I have a referral code for Questrade. If you're going to open an account with Questrade, don't forget to use my referral code, which will be in the description below the video. So you can get between $25 and $250 depending on your initial deposit. Thanks for watching.